Sudip Bandyopadhyay too joins in on the show right now. Sudip, these market-related themes have really come back to the fore, right? I mean, yesterday you had a big breakout in the likes of an Angel One. You had a BSE hold out very well, CDSL, etc. Anything that you find interesting here?
Well, BSE definitely looks interesting. The valuation is not cheap, but I think the way CDSL is moving up, and BSE holds significant stake in CDSL, that adds to the momentum. Of course, the new changes which have been introduced by SEBI does benefit in a way BSE more than it does NSE, and that's also adding kind of fire to the fuel. So BSE definitely, and overall market infrastructure companies. From a long-term investor's point of view, definitely look attractive. Somebody can buy it and decide to hold it for a long time. I think they will keep getting decent returns from these companies, even at current levels.
Point taken. In fact, Mark Mobius also talked about this as one of the themes he's watching out for. Hear out his take.
Particularly interested now in the aerospace sector in India. I think companies like Bharat Electronics are going to be very interesting going forward. So we're looking at that. And of course, software continues to be a big target for us. And we're looking at a number of software companies and companies, by the way, that are doing backroom kind of processing, paper processing. There's still a lot of work to be done in that area. Despite computerization, you have companies like Central Depository that needs to do a lot of paper processing in addition to computer processing. And of course, with technology introduction, that work will become much more efficient.
Okay, so the Central Depository, is the stock he's watching out for, CDSL that is, and BEL is the other one because aerospace is one sector that Mr. Mark Mobius believes is poised for growth as well. Just watching out for some of the buzzers in the trading session right now. So, of course, we pointed out how delivery is doing quite well. But in the last few minutes, Fortis Healthcare has also managed to perk up. In fact, there was that news flow regarding Paytm as well, wherein there was that deal that they're looking to do with the Japan's PayPay. My colleague Sumita will join us shortly to talk to us about that. In fact, she's right here. Sumita, tell us what's the latest and what's brewing with Paytm.
Yes, in fact, Paytm is looking to sell its shareholding in Japan's PayPay to SoftBank, and in fact, that could be sealed for $250 million is what sources are telling us. Sources also say that these deal talks are in their last leg. Now, remember, this is coming in after SoftBank Vision Fund completed its exit from Paytm earlier this year, and also for Paytm, this move could be in line with its strategy to focus on its core payments business, and of course, the fact that it is looking at ramping up lending business after RBI's decision earlier this year. Remember, Paytm also sold its events and ticketing business to Zomato. That deal was valued at over 2,000 crore rupees. So Paytm really focusing on scaling its core payments business post those regulatory hurdles earlier this year. In fact, it was also focused on a restructuring drive to cut costs within the company. And of course, it then received an approval from NPCI to onboard new UPI users. But let's understand a bit about this Paytm PayPay Association. Now, the association dates back to 2018. Paytm partnered with PayPay Corporation, which is a JV between SoftBank and Yahoo Japan to launch QR code-based cashless payments, and which is where Paytm reportedly provided the tech stack for the business. Now, what are the implications of this sale or this deal if it closes? Now, once this closes, it is expected to increase Paytm's cash reserves from over 10,000 crores to about 12,000 crores, and that will, of course, be significant for the company's operations. We reached out to Paytm, but Paytm said that we will provide an update through the appropriate stock exchange filing in due course. But let's also take a look at the earnings of the company. Well, EBITDA for the company was at 404 crores, which was an improvement from 388 crores a quarter on quarter. PAT stood at 930 crore rupees, which of course had the exceptional gain coming in from the sale of the entertainment and ticketing business.
Okay, that's that on Paytm. Sudip, what is it that you're making of some of these comeback stories, if you can call them that? Case in point being Paytm.
Well, I think I must say that, Aisha, they're doing the right things. They are kind of coming out of unrelated diversifications and where the focus is not there. They're trying to stick to the core and build a robust business. So these are all good steps. and I'm sure they will stand the company in good stead going ahead. Of course, the market has also rewarded. I mean, in fact, I think the Paytm share price has tripled in a very short span of time. So valuation-wise, I would probably not recommend a buy at this stage. But I think as a corporate, I think they are trying to do the right things. Also, I must talk about, since you talked about the platform companies, I like Delivery, and I've been liking Delivery for quite some time, even when it was down in the dumps. And I strongly believe that that company has the potential to even now surprise on the upside. Logistics is a thousands of years old business, and they are streamlining and digitizing the entire logistics space to run it in a more efficient manner. And this will definitely be rewarding for the shareholders in the long run. Amongst the other platform companies, of course, I like Zomato for quite some time. Though Swiggy is improving and things are looking up as far as Swiggy is concerned also. But, there is a tendency of winner takes it all in these kind of businesses. So at this stage, I'll stick to Zomato only.
That's a take coming in on some of these platform companies and what's happening. But overall for the market, Axis Bank is also actually doing quite well. It's been a bit of a late bloomer of sorts, because of late most of the headlines and limelight has been hogged by HDFC Bank and maybe ICICI Bank to an extent, given the outperformance. But Axis Bank is finally perking up today, and that bounce back in Tata Motors that Naresh and Kunal were also talking about. But on the back foot, Cipla continues to be under pressure. Asian Paints is down and out. Adani Ports is down and out. What do you make of some of these paint companies, Sudip? Is it just time to stay away from Asian Paints and other blue chips as well? I mean, Britannia has been completely out of favor when it comes to consumption. HUL too hasn't done too much around it. Some of these consumption-led heavyweights, just stay away?
Anisha, I think paints is a different issue altogether. There is intense competition with the coming in of Birla Opus, and there are a lot of destabilizing things happening in the paint industry at this stage. So as far as paints is concerned, I will definitely recommend staying away. As far as overall FMCG scenario is concerned, and you talked about HUL, Britannia and others, my view is that I think some of these companies, the price have corrected and they do look attractive at these valuations. India is a country of 140 crore people. Yes, earlier rural demand was subdued and the company suffered. Once rural demand picked up, unfortunately, urban demand was subdued and they were suffering. But I think, the festive season as well as the next quarter, I think should be good for the FMCG companies, and consumption is the way we are reading the ground reports is coming back, at least as far as FMCG is concerned. And I'm reasonably confident that FMCG will surprise us on the positive side in the near future. So yeah, general FMCG, whether it's an HUL or a Dabur or some of the other companies, even Godrej Consumer, which has a global exposure in multiple countries, they do look good at current levels.
Okay, that's that on what the consumption theme is bringing up. Talking about that, let's just address what's happening within the autos pack, because look at the surge in Tata Motors. It's back at 818, about a 3% gain today. And of course, there's been a Bajaj Auto and Eicher, which have also been going strong right from the word go today. Naresh, do you sense any rebound and a meaningful one at that, other than M&M in the auto pack?
So bounce back could be possible in Bajaj Auto, given the fact the stock has corrected from 12,500 all the way down to 8,800 levels. And this was the support the stock had back in start of 2024, multiple bottoms around this area of 8,600. So bounce back towards 10,000 also could be possible on Bajaj Auto. We are seeing a similar bounce back play out in Tata Motors. So many of the auto names which have fallen 25% from the top could see a recovery of 10-15%. And post that, get into a consolidation. Eicher Motors and Mahindra are the leaders in terms of relative strength. So they could be candidates which could break out going forward.
Point taken. So those are some of the stocks that one needs to watch out for. But overall, infrastructure and capital goods themes start getting a lot of traction just ahead of budget. Sudeep, we are entering that phase where the pre-budget consultations have kick-started today, and the finance minister is meeting the economists. But do you sense that pre-budget rally in some of these defense names and infrastructure companies is likely to happen this year as well?
Everything is possible, Anisha. I think that will depend on how FIIs are looking at Indian market at that point of time. December, I think, is a little too early for a pre-budget rally. We will have to wait for maybe towards the mid-January. We will probably see some kind of a rally coming back on expectation of a positive budget. Look, what's happening is the defense stocks are not cheap. Infrastructure stocks, by and large, are not cheap. So for a rally to happen, there has to be a solid reason and solid liquidity coming into Indian markets. We'll have to wait for these to happen. There are pockets in infrastructure which are looking even now reasonable. I would talk about Larsen. Even at current level, for a long-term investor's point of view, I believe Larsen does look good and can be picked up. Amongst the other companies, BHEL, performance used to be always bad, but last quarter they turned it around and the performance beat market expectations. There is no dearth of orders. A significant amount of orders they're getting and will continue to get with the kind of upsurge in power demand in the country. So BHEL also can be looked at current levels. As far as defense is concerned, I have been liking Bharat Electronics, BEL, for quite some time, and I continue to maintain my positive view on BEL. That's not only aerospace. I heard Mark Mobius talking about aerospace and related BEL recommendation. But BEL is a company which does supply electronic components to defense, whether it's Army, Navy, or Air Force. So, it's got its application across the spectrum of defense uses. And it has been a well-managed company with a strong balance sheet for a very, very long time. And the order book is, of course, solid. So Bharat Electronics, from a long-term investor's point of view, even at current level, does look good.
Taken. In fact, since we are talking about India and the FII view on India and all of that, let's hear out what FM also has to say about India, because she continues to believe that we'll be one of the fastest growing emerging market economies.
Quarter 4, which was very good, had an impact on Quarter 1. So the numbers were not alarming when you saw it. But Quarter 2, when it slows down and when growth numbers are reflecting, we should put it in the context of an economy, a governance structure, which was all focused on election. And therefore, Quarter 1's emphasis more on running the election through had a bearing on Quarter 2. It's not a systemic slowdown. It is more absence of activity on public expenditure, capital expenditure, and so on. So I expect Quarter 3 to also make up for all this. So the growth number is something which is not necessarily going to get badly affected. We need to also push up on very many other factors. So I would think India still, not just for this year, but for the next year as well, and the year after that also, very good chances and opportunities for India to remain as the fastest growing economy.
Still, it's pretty much the same set of stocks and the same mood in the market. We're still flat on the index. While it has been a little bit choppy today, largely we've spent the better part of today's trading session absolutely flat in trade. Tata Motors, Bajaj Auto, Axis, Maruti Autos definitely making a comeback today, as are some of the metal names. Tata Steel, Vedanta, they're definitely getting a good fillip up. And then there is L&T holding higher by about 1%, whereas HDFC Bank a little bit tempered today, as is the case with the rest of the IT pack too. But here's an ET Now exclusive, and we understand from our sources that the government is planning to implement a national single window system for GSTIN for sugar millers by December end. Sameer is here with all the exclusive details.
In a move to bring transparency in the sugar sector and also to provide relief to the consumers by keeping the prices of sugar under control, the government plans to integrate national single window system with the GSTN, and this integration is likely to take place by the end of this month. And with this integration, government understands that the quantity of sugar produced by the sugar millers or the producers, and whatever the quantity that is being sold in the market, that will be cross-checked, it will be verified, and the government will be having a clear picture that what quantity is being produced by the millers and the sales as well. So with this intention, the government plans to integrate the national single window system and GSTIN portal. And government has been receiving inputs from multiple sources that earlier the sugar producers, they were not actually providing the right picture to the government, to the ministry. Earlier, whatever the quantity that is being produced, this number was provided a bit late, duration was not matched, and also it was seen that the quantum that is being produced, less was given to the government, and then a larger quantity was being sold in the market. So there was a gray area when it comes to the actual data and the ground reality. So with this purpose to maintain a proper transparency, government plans to integrate the portal with the GSTN portal, and government understand that this will also help to check the availability of stock, the stock availability, and also this will help to identify that yes, sugar prices are under control, and wherever there is a requirement, government can actually provide and step in by providing the sugar in the much demanded area.
So point taken as far as that data collection is concerned by the government. Honasa Consumer has taken a bit of a knock in the last few minutes. Pull up that stock. Aegis Logistics is the other one, and there was that announcement of a large order for Kalpataru Power of around 2,000 odd crores, but the stock has taken a bit of a tumble. So Honasa, Kalpataru, as well as okay, Kalpataru is a bit wobbly, but Honasa I think has taken a bit of a dip as well. So yeah, there's that 3.5% slide coming in yet again. In fact, Sudip, come in on this one. I mean, we did discuss some of the platform companies, but Honasa has been that one of those big disappointments. Even MapMy India for that matter, wherein the street is a bit taken aback by the kind of corporate governance issues or the lack of transparency that has come in. What do you make of some of these stories and what's happening in the market right now?
As far as Honasa is concerned, post-listing, there was a lot of excitement, but I think the results and the management commentary was disappointing, and that led to a lot of rethink as far as Honasa is concerned. It will take some time before they are able to bounce back. I think it's a house of brand. That's what they're trying to build, and I would say potential is there. They have to get their act together, undoubtedly, and I think they will eventually. But at this stage, I think it's better to wait and watch. As far as MapMy India is concerned, it was a bit of a governance issue, and I think market rightly kind of flagged it off and corrected sharply, and they also retraced the steps. So I think these are lessons for the newly listed and the new generation entrepreneurs, where the governance as well as the discipline of an operating in an organized and structured manner is being indirectly taught to them by the markets. I think it's a good discipline which is being taught to them, and I think they will learn fast. I remember a lot of companies, a couple of years back came to the market where if you ask about profitability, they were answering that that's not one of the parameters they are tracking. But very quickly after they got listed, they came down to track those parameters, and now they are struggling to meet those expectations. So market is a great leveler and a great teacher in one way.
Consumer, let's also get in some BTST trades going on that note. Just 6 odd minutes left to go before we wind up for the day. Kunal, what's on your list?
So the first one is about Oberoi Realty. That's a chart which is heading towards a breakout about 2100, 2150 levels. So BTST targets of 2250 and stop us to be kept at 2090 for Oberoi Realty. And the second one is a BAN IRFC. That's a chart which is confirming or on the verge of confirming a 200-day moving average breakout, just about at 158.5, 159 mark. So would suggest a buy with 175 as a target, stop us at 150.
Right. Naresh, what about your strategies?
First is a bounce back on Tata Motors, buy with a stop loss at 800, target price of 830. Second is a breakout trade, Axis Bank, which has broken out and showing the latest trend today, stop loss at 1170, target price of 1225.
We were talking about Honasa and MapMy India. What do you make of Ola Electric? I mean, that entire consumer, disservice kind of angle really continues with more headlines coming in, with CCPA asking for more disclosures. There are reports doing around that in a survey, 99% of the customers were dissatisfied with their products. What do you make of this company, this stock at this price?
Well, I think you're absolutely right as far as consumer dissatisfaction with post-sale service, and it's a genuine concern. But I strongly believe that at some point of time, they will overcome this. But the real challenge to me is the huge battery plant which they are setting up with a significant capex, and that's going to bleed for a considerable period period of time. And considering what's happening in the global market, the way the battery prices are coming down, whether that's a wise decision to backward integrate the battery plant, I'm not very sure at this stage. So I'll very keenly watch the progress of the battery plant. Yes, the consumer complaint is a real and genuine issue at this stage, but I'm reasonably confident they'll get their act together pretty soon. As far as the valuation and the price is concerned, I think it's better not to touch the stock at these levels. Competition is intense. The established players, two-wheeler players, are all coming up with their own EV two-wheelers. And the Ola is bound to lose market share, and that's what is happening. So let things stabilize a bit more as far as Ola Electric is concerned before one ventures into buying this stock.
Okay, Sudip, great to have you on the show. Kunal, Naresh, we'll let you guys go as well on that note.
If you like this video, then like, share and subscribe to ET Now.